to our next session. It's my great pleasure to pass the mic over to my very good colleague, Jamil Wyne, who is an advisor at the Climate Robotics Network, and also the founder of the Climate Tech Bootcamp, which I've had the great fortune of participating in and highly recommend. He's also the co-founder of Riffle Ventures. He's deeply, deeply engaged in the climate tech space. Many of you already know him, and for those who don't yet, he's a great person to connect. So with that, Jamil, you have the stage and the mic. Over to you.
Thank you so much, Patrick. Great to see you. Great to be here. An honor, and also just congratulations. I know when we first met, you said you have this idea for the Climate Robotics Network, and I think exactly 1 year later, you're throwing, I think, the first global summit on it. So to say that you've made traction is an understatement, and just, it's an honor to be affiliated with you and supporting. So to give a quick intro on what we're going to try to do over the next 45 minutes, the goal is to have a direct conversation with a group of investors, ecosystem builders, donors, et cetera, that are helping to allocate capital, but also shape the conditions around capital allocation when it comes to climate, with a particular focus, of course, on hardware and robotics. And I'm particularly excited about this because the speakers here, in a lot of ways, come from a pretty diverse range of backgrounds, and I'm going to hand the mic over to each of them in a second to give a proper introduction on what they do on a day-to-day basis. But in short, what I think we can expect to hear from is a mixture of voices around venture capital, foreign aid, grant funding, direct advisory to companies, which I hope is going to give us a pretty well-rounded picture of what the landscape looks like when it comes to funding. And so without further ado, I'd love to give each of our speakers about 45 to 60 seconds just to give a quick intro on themselves. And then from there, what we're going to do is have a conversation between myself and the four of them. And in the event that any of you in attendance have questions that you'd like to ask, please put them in the chat. I'll be trying to moderate and field those questions, and time permitting, we'll be able to get a couple on the radars of our speakers. So with that, Fady, let me hand it over to you first to give a quick intro, and we'll take it from there.
Thank you very much, Jamil and Patrick. I echo what Jamil said. It's really impressive what you have put together. I also remember our discussion last year about the space, and it's really excited to be with you today in this amazing event. So a little bit about my background. I'm a mechanical engineer by training. Start my career in large corporates. Spent 8 years doing that, and after 8 years, I said this is not for me. I decided to quit my job. Came to Boston for the first time in my life. I went to MIT and I studied complex systems. And this led me to study innovation clusters and startups as complex systems. Started companies while at MIT because this is what you do when you are in this amazing ecosystem. And then found myself heavily engaged into the amazing robotics ecosystem in Boston. Worked in companies that were securing government grants and developing cutting-edge technologies. And then I came across a familiar problem to many of you, which is how do you commercialize robotics technology? So put together a proposal that eventually became the foundation for an organization called Mass Robotics, which is basically, it meant to be a systematic way of commercializing robotics IP and build and scale those companies beyond the prototyping stage. So the organization grew from just an idea and a couple of slides and me taking meetings in the Marriott in Kendall Square to probably the leading robotics hub for startups in the US and probably worldwide. And after doing this for a few years, I realized that this is not a mission complete. And there's still a funding gap for early stage robotics companies because guess what? This is a whole investment class. It's very different for most VCs, and many VCs, they don't know how to kind of think about the robotics company, the unique needs and challenges and evolution, all of that. So we said, okay, this seems like a good opportunity. So we decided to establish a fund. called Cybernetix Ventures. And it's an early stage VC fund focusing on pre-seed, seed, and Series A companies. And we structured the fund to be vertically focused. So we focus on certain verticals. And climate has been one of the key themes, always kind of cutting across these verticals. Today, we have 13 companies in our portfolio between the US and Europe, companies in different verticals, different stages. And we also started putting together an event. We like to think of it as a think tank called Robotics Invest. The idea is to bring the investment community, the founders together and think about how we can scale the next generation of robotics unicorn. I'll stop here and I'm looking forward for the conversation.
Thanks a lot, Fady. I think a lot for us to dive into both now as well as in follow-ups. I'd love to connect on a couple other fronts. Let me go ahead and hand over to Urvi. I don't know if you're going to plan to factor this into your bio, Urvi, but when I first got connected to Urvi, she is the #1 battery expert. You got to know her. So it's great to have you on the panel, even if you're not going to talk about your illustrious career in batteries. So please, over to you.
I think you give me a bit too much credit there. But I've spent the last decade in transportation electrification before moving into the climate space. I'm presently with Climate Finance Solutions, and what we do is we help companies basically identify what grants are out there, how to apply for them and when. We've helped in the last 3 years companies win $1.45 billion in awards for over 100 different companies. And our goal is basically, how do we scale all of the climate solutions that we need? And, prior to that, I was in transportation electrification. So I was on the team at Motive Power Systems that built the first all-electric school bus. And so I've got some experience on what it takes on the OEM side of things in the climate space, as well as then several different companies on the infrastructure side and supporting energy behind the meter and those kinds of large scale projects. So I've seen in a variety of verticals from transportation to energy, as well as sort of systems planning, the role of different technologies in different stages of maturity. And so my goal here today is to kind of share some of the learnings from across the climate ecosystem and how that is factored in with some of our clients in the climate's robotic space, as well as how it helps just general emerging technologies and trends to be aware of if you want to be able to make it from the lab to pure commercialization.
That's excellent. Wealth of knowledge there, and excited to dive in on that, and as well as do a follow-up catch up because it's been a while. My good friend Malini here. We, funnily enough, are buddies from grad school. So I feel like we've got a little bit of a connection to everybody here. Malini, please go ahead and tell us a little bit more about yourself and what you're up to at IDB.
Excellent. Thank you. And thank you, everyone. Good to see everyone on the chat. So Jamil gave it away. I studied development finance in grad school at Johns Hopkins SAIS. And since then, I've been a climate change officer at IDB Invest. So IDB Invest is the private sector arm of the Inter-American Development Bank Group. And traditionally, before these banks, these large multilateral development banks focus on making loans to sovereigns all around the world. And in our case, IDB works on Latin America and the Caribbean. But of course, with the numbers we're seeing that's needed for climate finance, there's really a need for the private sector to get involved and for corporations to get involved. And so a couple of years ago, IDB Group set up IDB Invest. And since then, we've been working on investing in corporations that are trying to do all types of sustainable development goals work. But this past year, we did about 5 billion in investments generally, and we have a climate finance floor of 30%. And that means we work with all types of sectors. So we're structured as financial institutions, which is actually where I work, infrastructure and energy, and then corporations that covers agriculture, tourism, manufacturing, and so forth. And the way we do it, because all of these businesses, across the region have their general business models, but we use advisory services as one of, the key components to get these corporations to think about how they can change their operations, how they can change their strategies to invest in climate finance. And I'll stop there. Thank you.
Thanks so much, Malini. Very excited to dive a little bit deeper on a couple of those points, particularly as they might relate to the LATAM ecosystem around climate finance. Last but not least, Sashi. I believe we might have connected when I was doing a training for USAID and DFC on climate finance, if I remember correctly, about a year ago. So it's great to connect with you here again. Please, I'd love to hand the mic to you to introduce yourself and USAID's work in a little bit more detail.
Yeah, thank you, Jamil. Nice to meet everyone. So as Jamil introduced, I work at USAID in Washington as a senior climate finance advisor, and we sort of developed this portfolio only in the last 3.5 years when we realized that all of our scientists, both working in Washington and in 80 countries over the globe, are not going to achieve our targets to a net zero transition at the pace we're going at based on just science alone, that we need to transfer and figure out how we get additional funding to disruptors and entrepreneurs out there. And so, yeah, it's been about 3.5 years that we've been building this momentum of really showcasing opportunities for investment with our very limited subsidies that we can offer. It's not unlike, what is being done in the US here with the IRA and their support for green banks. But obviously ours is a drop in the bucket. So we work closely with other donors as well in order to, catalyze more public resources for these ideas that are being generated by the private sector in order to reach our climate adaptation and mitigation goals. So I'll share a little bit more as we continue in the panel. Thank you. And thank you, Patrick, for having me here. I also can share the story of a year ago being surprised, but also I'm very happy to hear that this would actually be something that could be developed, because there is very little at least in the markets I work in terms of bringing in, robotics to our work. So.
Thanks so much, Sashi, for that. And if you're okay with it, maybe we can just pick up the conversation where you left off to shoot the first question your way. So funnily enough, I just got back last week from working with USAID on a climate finance project in Morocco. And so a lot of these questions were kind of fresh in my head. And so it's a little opportune that we're getting a chance to talk to each other today about this. Where do you think, when it comes to implementing USAID's climate finance strategy, or maybe broader climate strategy, both on the mitigation and adaptation side, the theme of robotics can fit in? Because you're working in tens of different countries, lots of different development conditions, lots of different climate risks, and I think there could be any number of use cases. But I'd love to hear kind of where you think the opportunities are, where you think also certain challenges are that potentially others that are on the panel or others that are listening could, support on.
Yeah, thank you. So I have to preface by saying I am not a technology expert. That would be many of you here. And I'm not a robotics expert, but I know that technology is going to be critical to getting to our goals that we've laid out in our climate strategy. And the way that we believe, robotics could be supportive is twofold in our strategy. One, we have this short-term goal, which is, quick and fast piloting, get out there, test immediately small-scale solutions, whether it's in countries like Morocco or Kenya or in small island states, like Barbados and the Maldives. We need as much help as we can. And so part of our strategy is, just get out there and see what's working in order to learn from one country or one approach or one model, and then take that, scale it up, and hopefully get additional funding and bring it to other countries. The other aspect is thinking about it from a more systemic change. And this is a little harder to tackle because we think to really get to scale at some level, we need to look at system solutions that cut across economic systems with financial institutions, similar to what Malini mentioned, and shift away investments in fossil fuel to low carbon technologies to really support this transition to a net zero economy. That second goal is obviously a lot tougher, but I think that's where there's learnings we can take from what's being done in Europe and in the US, but really, understanding where the right incentives are in place within government and the private sector to develop these technology solutions. And again, it's a little bit of like testing, but sometimes it is, a complete theory of change that we may or may not know will work, but takes time to develop. And so I think, we're trying to do both the short term and the longer term. The longer term requires a lot of intellectual support and capital from across our partner world. And in achieving both of these, we work hand in hand with host country governments, and as I mentioned, private sector, but also critically, I think, civil society. So in terms of impactful opportunities, I would say the most impactful can be obviously the ones that are closest to the ground. Just before this call, I was talking with colleagues running accelerators in East Africa for entrepreneurs working on biochar. I mean, that's like a small, sliver of what's out there, and how you can pull out both mitigation and adaptation. So carbon offsets is a huge economic opportunity for the communities we work in. I think robotics could have a huge role to play in really leveling the playing field in order for us to understand a standard price for carbon. And so I think the sky is the limit because it is such a greenfield space. And where we really want, as USAID at least, to support ideas is through our decentralized models in the field, which is our missions led in countries themselves. But part of my job here in the US is to see what's working from other parts of our donors like IDB, and then suggest that to colleagues in Barbados or Dominican Republic or Jamaica or Peru or Brazil, and say, hey, do you want to try this? Do you want to try that? I would say in terms of barriers, though, to capitalize on these opportunities, it is that, well, frankly, it's these communities and the countries we're working in are vulnerable for a reason. They have high debt, they have high inflation. They're being pressured in all ways to increase their economic growth, and economic growth comes at the expense of the environment. So it's a really challenging dichotomy for us to work in, because while we're trying to say farmers need food security and resilience, we're also saying, oh, but don't use the most traditionally, common approach of pesticides to grow these the fastest. No, actually use something more natural. I mean, it's unfair. And that's where I think, robotics could help us. Again, like I see it as being transparent, accountable on like more naturally eco-friendly ways of farming, regenerative agriculture, and letting us quickly see the opportunity in order to make the business case for example, climate smart agriculture methods versus traditional. So not an easy barrier to overcome, but I think that's part of what we're all trying to do together here.
No, thanks so much, Sashi. I think that you have such a unique purview in this ecosystem, because I don't think there's many institutions in the world that can operate across as many countries as USAID does at one point, and kind of pull best practices from one geography and explore if they can fit in another. And as you mentioned earlier, I think you used the word system a few times, and I think that's pretty critical here too, right? Because I think introducing robotic products or hardware products usually means you have to have a systems thinking hat in some shape or form. I'm going to dive into that a little bit more now, because you kind of, I think unintentionally maybe handed the platform over to Malini to dive in a bit more on this. So Malini, I'd love to follow up on a couple of the points that Sashi mentioned, and maybe if we can tailor them a little bit to what IDB and the LATAM experiences look like. So when we think about developing the right systems, or we could also call maybe in kind of investor speak the enabling environment, what do you think are some key levers that groups like IDB can pull to build that more enabling environment to help with technology adoption, robotics obviously being the main vertical we're talking about here, but perhaps you can think about it a little bit more broadly too.
Excellent, thank you. And no, I would also preface this with saying, this is a new space. And as I was preparing for this panel, I was kind of asking around with colleagues what they're doing in the robotics space, and it's still quite limited. But I think the same lessons we've learned with other technologies and other financial products can be applied here. So let me start by saying technical assistance or advisory services is a really important piece, because all of these companies, now think about it, not just startups, but all of these companies have their ways of doing things that they have been doing for decades. And now suddenly they need to transition to net zero, or suddenly climate change is already happening and they need to start thinking about what we call in investor speak physical risk, which is basically the response to that would be climate change adaptation. So what we do at IDB Group, there's a couple of things. One, we can offer blended finance solutions, and we've seen that with other technologies, but also across funds, where we're able to provide concessional financing. So that means if there's a market failure, if a technology is not working, if there isn't a business case for a certain type of company, we're able to do blended finance solutions that help incentivize the company to meet certain targets. It's kind of like what we have in sustainability linked loans, except that you also give incentives. So that may mean lower interest rates, but it also may mean longer tenors. So that's one tool we have. And we're not seeing this yet for robotics, but it's something that I would predict that in the future we will. Now, the second piece is what I started with, which is technical assistance and advisory solutions. So think of this as an investor, we also have an internal consulting arm that can provide advice to some of these clients, so portfolio companies, but also future clients that we want to work with. And more, we're starting to work with clients up front so that we're able to unlock that climate finance and channel that climate financing. The other thing is mobilization. So beyond our capital, we also bring on mainstream lenders that are able to invest. And everyone's trying to invest in green projects, and we're not yet seeing as many green projects that are bankable, if you will. So that's our role within advisory services, to make these projects more bankable. So something we've done in, as simple as solar PV technologies that we do with clients is market studies, feasibility studies, regulatory studies. All of these things are going to be really important for companies that are starting to look at robotics so that they're able to show the business case for investing in it. We did have, from IDB Invest, we were talking to a couple of clients that are looking at potentially using robotics, so things like drones for fertilizer applications so that it's more efficient. So far, it's really at the grant and advisory services stage, as well as looking at investment grants. So again, coming back to this point, it's not yet bankable, but there's a transition period in the middle where you need to make resources available so that companies can go through this. The other point I would make is that these investments, compared to what DFIs typically do, or at least a DFI like IDB Invest, where our transaction sizes tend to be between 5 and 100 million on the large side, we're not going to be able to invest only in climate robotics for those amounts, at least not yet. And so there's this concept of, within a larger loan, what percentage of that loan can be tagged as climate finance? And so as we're working with companies that have many other needs for financing, can we figure out if a small portion of that can be used towards robotics? And that's kind of where we are. Another thing that came up, so for a project in Chile, they were exploring whether we're able to do, drones, as I mentioned, and actually there are regulatory barriers. And there was an issue then with using drones. And so sitting in a group like IDB Group, because we work with the private sector, but also we have IDB, which works with sovereigns. And so we're able to communicate back some of those regulatory barriers. And when the country is ready to work on them, they can tackle specifically, well, what are those regulatory barriers, in this case, as it works for drones or climate finance, so that climate finance can be channeled better.
Thank you so much for that, Malini. I mean, I think when I hear it's about how do you build that field, right? How do you build that pipeline because at the end of the day, you still have to deploy capital with some type of a return, and it's not a charity, right, that any of us are providing here. We're looking for scalable businesses that can have an impact, and robotics is no exception there, of course. Or any technology solution, no matter how impactful it could be, is no exception. And so I think that emphasis on bankability is pretty critical here. And I think both you and Sashi have this very unique role, as I said, where you can kind of take a step back and look at an entire environment and start shaping the kind of the nodes in the network so that you at least kind of optimize the chances for finding bankable deals for groups potentially like Urvi's as well as Fady's to come in. Obviously, I know you guys operate in different geographies, but in theory, I think that's what you're kind of building the field for. So with that, let me turn over to Urvi and Fady to talk a little bit more about, maybe we can think of this as a bit more of like a micro, kind of a micro scale of thinking, right? Because our first two panelists operate maybe more in the kind of the government and the donor space. I feel like both of you are working directly with firms on a daily basis, thinking about capital raising, capital deployment, market access, all the fun stuff that comes with being an investor and an enabler in the ecosystem, but also all the nightmarish things too that come with that. So maybe we can start with Urvi. So CFS specializes in a range of different areas, advising on grant deployment and fundraising, and being able to acquire, in a lot of cases, very important capital that could be non-dilutive, that could be critical for the early stages. And I know you guys provide a lot of different services, so I don't want to limit you too much to that. But can you tell me a little bit about maybe both what when it comes to CFS's work in the robotics domain, like what are you seeing when it comes to opportunities, but also lingering challenges that non-dilutive funding can support with, or to use some of the language that Malini used, technical assistance to help get these deals more ready. We'd love to start there, and we can build accordingly.
Definitely. So one thing to be aware of is when you're thinking about the grants ecosystem, not all grants are created equal, and grants have a huge range. You've got everything from like the SBIR, so the Small Business Innovation Research style of grants, where you get $100,000 basically to explore an idea and say, is there a commercial potential there? There's technical assistance ones. There's also things that are for, you've got some early stage validation. Let's do a small pilot. Let's take it off of the bench level. Let's do large scale deployments. Let's get DOE backed loans. One of the really important things that we point out to a lot of our clients is that the government is one of the few areas that invests from the earliest stages of technical readiness all the way to commercialization, with things like tax credits and the eligibility for those programs, the Defense Production Act, and other programs like that. And so when you're thinking about what is your climate stack and how are you going to get your idea for a robot into a commercial product, there's a lot of money out there and a lot of tools, but you have to think, what is the correct tool for the point of time in which you are? And across the climate stack, there's a lot of money, but I think it's really important when you think about the technology, there's a difference between sort of research grants. So like National Science Foundation will have research grants for really core scientific activities. If you're validating a component, a battery, a material, those kinds of things would fit nicely in those kinds of pots of money. But then once you start to get into the applications, you really need to think about, what is my robot doing? Because it's going to be a totally different funding pool. So for example, we have worked with clients who have gotten grants from CAL FIRE to do a, satellite responsive autonomous tractor that you can basically send into a really dangerous area to help do fire lines when it's hard to get a human crew out there. We've seen, climate robots that are in the agricultural space where they're using AI to determine, is that a weed or is that a plant that we want to be growing that should be on this field? And if it's a weed, it will basically use a robotic arm to pull it out. We've seen companies who build robots that, make solar more efficient to install, which one of the things about solar is, especially rooftop, the urban heat island effect, it can be, 10, 20 degrees hotter than the day that you're in. And so it can be a really dangerous work environment. And so there's different types of robots and different types of climate verticals. Whether you're thinking, autonomous taxis that are electric vehicles, or whether you're talking, satellite services, monitoring methane, there's a couple different ways you can think about what is the robot and what is the point of the robot, and therefore what is the economic pathway to fund the robot. most grants have measurement and verification. And so if your robot has a bunch of sensors, you could be a part of a larger scale deployment and be part of the monitoring plan. It could be that you are basically creating a robot that's a coworker and helping do the activities in a way that is safer for staff. You could be doing something where it's a dangerous environment, and so you have a more robust robot that can extend the ability to do work, whether that's undersea, whether that's, in the air, whether that's just, carrying large loads. And so I think one of the key things that we see, though, is you need to know what is your technical readiness level, and you need to apply to a pool that has that risk tolerance. And you need to be very blunt about that. If you represent yourself as being able to do more than you can, that will backfire. It will make the agency unhappy with you. They will likely give you a poor score. You, one, might not win the grant. Two, if you win the grant, you might not do well, which would impact your ability to get future grants. And it has a reputational effect. On the flip side, when you do it right, grant funding is one of those things that a lot of companies who have strong capital access still pursue because of what's considered the halo effect, which is when you go into that space, if you're working with the DOE, if you're working with NRAL, if you're working with USDA, there's a type of legitimacy that you get by having partners who know what they're doing and are seen as strong knowledge holders in the space. And so if you say, I'm going to do a climate robot, and nobody agrees with you that that's a climate robot, that question of are you bankable is really there. Whereas if you say, I'm going to do a climate robot and here's all of my partners, here's the university I worked with on this grant, here's the government agency I worked with on that grant, you can usually take that to a bank and you can get debt capital to help support that grant work. You can also use that as part of your technical validation in approaching other loan programs. And so I think that approach is really important across all of the different verticals. But I think the more general your technology, the harder it is for a program to fund it. With grants, you really want to get into the where, when, why, how. This is project specific oftentimes. It's not just here's money for your team, go do a thing. So it might be here's money for a manufacturing plant. Please build it in an impacted coal community. Or it might be, here's money for redesigning a material that is otherwise, problematic. And so you might be specifically testing out a new material or a new sensor, but it's always going to be a much more distinct chunk of work. And so if you're trying to raise money, there's sort of two things that are both good for raising money and good as just best practices in business, which is make a technical roadmap of all of the activities you're going to do. What are the risk levels of each part of that stack? So it might be that you have a really strong design and you validated some points that are almost fully commercialized, but you want to integrate like 2 or 3 R&D features. Each of those can be their own projects, and you could search for different grants for each of those. But then also when you're considering funding it, you might want to go to a bank for that most mature piece of the work, and you might want to go to a grant agency for that least mature point, so that you're using the different types of capital for what they're best for. You can use the non-dilutive to de-risk it, and you can use, traditional banking where you have a bit more control over the timelines and the flexibility for areas where you don't need that additional support.
Thank you so much for that, Urvi. I feel like when I'm listening to you speak, I think you're maybe mainly coming from the non-dilutive funding angle, and you're giving pretty privileged, rare insight, right? Because there's that age-old question when any entrepreneur is getting off the ground is who's gonna fund my idea, and then the investors are going to say, well, I need to see traction first, and then they're going to say, well, how do I get traction without funding? And it seems like you've started to help demystify that question a little bit here, right? Because for obvious reasons, VCs are always going to have kind of certain thresholds that they want to see crossed, but there's a world of non-dilutive funding. I mean, obviously, we're talking from the U.S. angle here that can support with that, right? And getting them across those TRL levels. And I'm glad that you mentioned the TRL levels, because I know somebody had a question about that here. Maybe we can revisit it in a second. But I'd love to use this to shift over to Fady. So I have a ton of questions for you, Fady, but I know we only have about 10 minutes remaining. So maybe I can ask 2 questions, one that kind of builds off of some of the points that the other panelists have mentioned so far, but then one that I think is kind of unique to you. So one, you mentioned in your opening statement that investing in robotics is just different, right? And I'd love to dive a bit deeper on that. And I feel like you're uniquely positioned to be able to say, no, here's why it's different, right? Because I've been building companies in this vertical for a long time, and I know my stuff, and this is exactly what distinguishes this vertical from others. But then because you wear the investor hat, where are the opportunities, right? Not just because we all care about achieving certain climate goals, but frankly, we need our markets to work in favor of this too. And we need to be able to see returns. And so I'd love to hear where you think, from a returns angle, this is the opportunities are most interesting. So to recap, what makes this sector different, but also where you think the big opportunities from a return angle are in it?
Sure. First of all, I mean, I learned a ton, and it's amazing to see what every organization is doing. And Sasha, I really liked your comment about the agriculture and precise agriculture. Definitely, we see a lot of innovation there. And Malini, I totally agree with you on the technical assistance. It's definitely needed, especially in an emerging space like that. For robotics in general, for climate robotics and Urvi, I do agree with you in terms of the plethora of funding options available and like how you can pick and choose depending on what you're doing. So my contribution, I think robotics is tricky because it's not, if you think of investment as a spectrum, on one end of the spectrum, you have software, pure software development. And this is an area that investors are familiar with. There is matrix, there is milestones, financial models. So software as a service, or SaaS, is a pretty kind of mature, well-known kind of area. At the far end of the spectrum, there is biotech and deep tech, the real kind of sciencey ideas that will take years to develop, and a lot of capital and trial and error and high risk. Those are what the life science, the biotech. And when you think of robotics, robotics does not fit either one. It's somewhere in between. It has some elements of the software because any robot will have a software. And it also has some elements of the deep tech because there is a hardware, there is a piece of machinery, there is some kind of engineering challenges, but it's not really science challenges. So this is where robotics fit. And it's kind of good and bad. It's good because it's not kind of less sticky and high churn like software, and it's not very hard like deep tech and biotech. But the trick is, it's a whole investment class in itself. And the financial models that are mature and well developed for those two kind of extremes does not really work for robotics companies. And this constituted a challenge for many robotics companies when they go and fundraise, because if I am a SaaS investor and try to force my financial models and revenue expectations and revenue profile kind of growth on a robotics company, it does not work. It would look very unattractive for me. So this is the challenge. That's why it's quite different from an investment perspective. From a product and a market kind of perspective, there's a very famous chasm that everyone kind of aware of, and innovation dilemma, and many books have been written about, which is the chasm of how do you move from the early adopters that will buy your product or use your product to the mass market. This is a chasm that not many companies are able to jump, right? So this is well known, well studied, but there is another chasm that we found over the years was dealing with hundreds of robotics companies, is that it's a unique chasm for hardware and more specifically robotics companies, which is how do you move from a prototype to a finished product? This is a chasm that you don't have in software, because guess what? Once you have a prototype, you are good to go. You put it online, let people use it. The worst thing that could happen, the software will crash. Nothing less, nothing more. That's it. But in robotics, you cannot ship a prototype of a drone or an autonomous vehicle. I mean, bad things could happen. People could get hurt or even killed. And there is a lot of liability, and there is a lot of cost. And kind of recalling this piece of machinery back involved lots of complexity. So this created this chasm that even if I have a working prototype as a robotics company, I cannot ship anything. I'm not done. So where do you go? You don't have revenues, you have a working prototype, and you still have a lot of work to do until you get to this kind of first finished product. So this is another kind of unique thing for robotics from a product and a market perspective. And in essence, this was one of the motivation for me to kind of focus on the whole mass robotics model, and it has a very unique kind of startup engagement model. But these are some of the differences when it comes to investing in robotics and in terms of the actual venture building and venture scaling for robotics companies. So I think you can trace it back to the fact that you are dealing with hardware, you are dealing with software, and those need to get integrated, and then you need to somehow embed it in a larger kind of solution that the customer can make sense of it. So this is for the first question. For your second question about the opportunities, I have been a firm believer in the role and the responsibility of the robotics community for climate. Since probably 2019, 2020, when like the whole kind of climate community started to kind of like, I mean, wake up folks, we are heading into the no return kind of limit. I felt that we as roboticists, we have a responsibility, and we cannot just kind of say, let someone else do that. And the reason is, we all know that you cannot solve any problem at the same level of complexity that it was created at. I mean, this is a universal rule. So I do believe that the climate problem reached a level of complexity that we cannot solve it manually. We have to use machines. We have to use AI to solve it. There is no way that we will be able to quickly manage that and solve that. There is no other way, in my opinion. We have to use smart machines to solve the climate problem. And if this is the case, everyone who claimed to be a roboticist, climate should be front and center. Regardless whether you are developing a direct climate robotics product or an indirect one, because it's all connected. So, so this has been my belief. I do like when I try to kind of summarize what we have seen over the years in the space, and as I said, climate has been a key theme in all the verticals that we look at when we invest in Cybernetix. It comes down to two main areas. There is the indirect kind of benefits from robotics, and those are solutions in logistics, for example. I mean, a company like Locus, they have a very clear benefit for why their autonomous mobile robot in warehouses are kind of saving energy, are reducing carbon footprint, and providing a lot of kind of benefit for the environment. This is one example, and the same is in manufacturing, and the same in agriculture, even though that agriculture kind of like on the border between direct and indirect. Construction is another great example. I mean, huge opportunity to have a real impact in the environment and climate from focusing on solutions in construction. But the direct one, we have seen solutions around creating robots to install solar panels. How you can quickly deploy these robots to speed up the installation and the maintenance of solar panels, which is another big problem. I mean, dust and snow and all of that. I mean, you need to maintain solar panels, especially if you have huge farms of solar panels. How can you do it? Do you expect like an army of people to go around, like, I mean, fix those farms? I don't think so. I think we will be seeing robots doing that. And then I saw a company that actually it's a lawnmower for solar farms, because the grass grow and kind of it can hinder the visibility and the sunlight. So this is one area. Wind turbines. Yes, maybe we are not using robots yet to install the wind turbines, but guess what? there are companies now looking at maintaining wind turbines. So Reblade out of Denmark, amazing solution. A drone that will fly, kind of latch to the blade of a wind turbine, and then it will kind of slide back and forth, kind of sanding the surface and putting some treatment. We looked at companies that in the demanufacturing space, which is a very elegant space that I was really impressed when I started looking into the space, because we are producing a ton of electronics, iPhones, laptops, and the dirty secret, lots of servers, all the AI and cloud technologies. There is a big hardware piece. This is not pure software. We are speaking about huge, massive data center farms with, thousands of servers. What will happen when all of those servers reach end of life? It's a big question. So now there are companies like Moog, for example, that they will build a cell, a robotic cell, that will take these kind of products, electronics products, and demanufacture. And think about what's the circular economy there? Can we leverage some of the components? And Apple has its own proprietary robot that can do that for the iPhones and other phones. So it's these kind of like solutions. Obviously, trash sortation, companies like Glacier and AMP doing phenomenal work. So there is a ton of opportunities, and mainly driven by advances in machine vision technology, the manipulation, the kind of very dexterous arms that can manipulate things, and just advances in AI. But here is one.
Fady, we have to actually unfortunately wrap up.
Okay.
We have about 30 seconds left. I'm sorry, but
we need another session for that.
I was gonna say, I think Patrick, that's a call for another 45-minute session. I am immensely grateful that all of you have taken the time to share your expertise, and I'm sure the audience, as well as the larger Climate Robotics Network, is grateful for it as well. I wish we had more time, and sincerely mean that. Let me quickly wrap up with what I think are some of the big takeaways here. So I think if you haven't noticed, the applications for robotics across climate-related risks are enormous, right? Fady did just an incredible job. Everything from circular economy and the demanufacturing service that they can provide, which I didn't even think of before, installation and maintenance, providing support where humans are just simply not going to be able to, either because it's becoming too hot outside or we just don't have the capacity. So the use cases are enormous, but at the same time, investing in these companies is just different, right? We can't think about it from a SaaS angle. We got a little bit spoiled, I think, as investors with the SaaS kind of uptick of the past couple decades. We need to put a different hat on when we're viewing the risks, but also the returns when it comes to robotics. We also, because of that, as Urvi was saying, need to think about how do we move these companies up the TRL ladder faster, right? Climate is all about urgency. We can't just wait for the robotics experts and companies of the world to eventually find their way. What can we do to get them there faster? Which I think brings us to the technical assistance and ecosystem building that Sashi and Malini were talking about, where we have to make sure the environments are right, but we need to be providing direct technical assistance so that people like Urvi and Fady can actually deploy or help deploy capital to these solutions faster, particularly in the most vulnerable countries where the needs are the highest, I would say. I don't know if the Climate Robotics team wants to say anything else. But I want to thank you all very much for taking the time to be with us and share your expertise, and encourage everybody to stay for the next session and keep listening.